Recording.
This is Market Week Live for April 11th, 2025. Information and support for traders and investors. Welcome, everybody. A lot of people coming in our room. And of course, we have a crowd out there on YouTube watching us live. So glad to have you all here. Coming up in this show, we're going to have our express round. Level 1 to 4 members at askSlim are in a special room here, and they can ask their questions. So if you're watching on YouTube and you want to participate in the Q&A, please do become a level 1 to 4 member. We're going to be answering your questions. And you can ask on our services, trade planning, chart analysis, trading issues, any of those things. I'll be glad to answer that. You having any kind of psychological, emotional issues based on this crazy market that we're in, I'll be glad to help you with that also. Matt is then going to review our services, specifically our cycle analysis workshop special. You're going to want to look at this and invest in this great deal we have to offer you. And I'm going to bring you one of the most amazing pieces of stock market analysis that you have ever seen. I promise you, you're going to love what I'm bringing you. Besides that, I'm going to bring some of the evidence, probabilistic projections in price and time. I'm also going to look at interest rates and the dollar, which has caused big trouble in the markets. We're going to look at the S&P 500, NASDAQ, see what other ones I have time for in here, but we'll look probably at the VIX and the Dow Jones Transports. And you're going to see our proprietary studies and our market condition monitor. And I'm going to do some unbelievable explanations to you about what is going on in these markets. If you want to get acquainted with us, go to our free stuff at the top of askSlim.com. Sign up for our Snapshot Lite, free daily information on the S&P 500. On YouTube, subscribe to the channel, click the notification bell, like this video, give it a thumbs up, follow us on X at askSlim. And any questions you have on anything we present today, if you want anything on our membership offerings, upgrades, whatever it may be, write to Matt at askSlim.com. This just says that everything that we do is for entertainment and educational purposes only. We encourage you to consult with your investment decision makers. That's the professionals that you talk to, and always refer to your own trading plans before you make your decisions. Here's our contact information. If you have membership issues, website issues, write to team at askSlim.com. Anything on our content, information on education and analysis, first-time specials, and upgrades from our present members, write to Matt at askSlim.com. Today's hosts, I'll be here, Matt, Arvi, and Katie. The whole analytical team in here, and this is quite a team. You want to learn more about us, go to askSlim.com, meet the team, and you'll be able to watch interviews and see a lot about our histories. As you know, I've been around for more than 50 years, and it's my goal to share the lessons that I've learned in the market with you. And I know our whole team wants to do that also. All right, so we're going to open it up for questions in here. And if you have questions, those can go into our Q&A, and we'll be able to see what it is that you would like us to do analysis on or answer any questions. We're going to be doing this for about the next 10 or 15 minutes, and then we will move into the analysis on the stock market and our great offering on our workshop. For me, I'm going to do the indexes. I'm sorry. Yeah, I'm going to do the indexes, TLT, VIX, any of those questions on that as we get into the end of the show. So I see a question for TLT, SPY. I'm going to look at SPX. So I see gold for me is one thing that you want to see. And light crude /CL and natural gas. Those are the commodities that I'm going to look at. I'm going to show TLT. So Ray, you're asking for bonds. So I'm going to show that regarding TLT. Same thing for Regis as we get towards the end of the show. And I see there are tickers here for the for JP Morgan. Boy, there's a lot of in here. Let's see. You want US dollar JPY. I'll look at that, even though I'm going to show the dollar later on in the show. And somebody wants the yen futures. I will look at that because US dollar JPY and forward 6J are they go together. And this is important to the analysis I'm going to show later. So I have 6 symbols to show. The rest of the team, you have PLTR and SMH, Newmont, and anything else that comes up in here. JP Morgan, I see that. So yeah, we have a lot of things we're going to look at. We're going to try to do this in the next 15 minutes, and then we will then move on to the rest of the analysis. All right, so I'm going to move over to the charts. Of course, for those of you that are brand new, you look at a chart like this and you say, what the heck is that? Well, that's cycle analysis on the bottom, and we look at the market rhythms, the money flows in and out based on how we identify the important troughs in the market. And you can see in here that on this gold chart that we're looking at an amazingly strong situation, whereas the corrective periods, which you can see right in here and right in here, they were at almost nothing, as you can see. Now, there is multiple cycles coming down here into June and July, and once this buying panic is over with, there's going to likely be a correction out to that period. A very key number here at 3283, which I actually didn't think was going to make it. It was really an outside projection for us looking at that. I'm going to look over here at the MCM, and I'm going to put up GLD, and you can see in here that right across everything, it is a very bullish condition. It's been this way for a long period of time. It went from bullish to very bullish just a couple of days ago. When I go to the intermediate right over here, you can see the same thing. So if you're an intermediate trader, it gives you the information, very bullish. Short-term trader, very bullish. Near-term trader, which means you're a swing trader, very bullish. Every single one of those just absolutely incredibly bullish. This analysis in here has pointed here. Let's see where the reversal scout turned up right over here, confirming these cycle bottoms right there. It's been absolutely positive all the way up there. And here we have the dominant supports, which those don't even come into play until we get some kind of a top set in here. And those are rising. So they'll be reset for our members in the next couple of days. Here you could see these amazing shorter term cycle rhythms that are in here. This is where we had a period of risk. You see that where there was likely to be a correction. And I thought it was going to last a little longer and go a little further than it did. It stopped a little bit earlier than I expected and then flew on the upside. This is related to the movement in the dollar that we're seeing and in the bond market that we're seeing as money moves out of those vehicles and into gold in a panic is what's going on right now. And I will talk more about that a lot moving on later in the show. So you can see in here rising. This is the slim ribbon PO on the bottom. When it is green, it tells you the slim ribbon is positive, as you could see right over here. And when you get a green arrow, it gives you a momentum upside resumption signal. When you get a red arrow, it gives you a negative signal. Look at all of these signals in here that warned you about higher prices. Fantastic. This is our option bias study, which right over here turned positive, and it said keep your option positions biased to the long side. Well, that was no lie in here. So that was really fantastic. This key level over here is around, we'll just call it 3286. There's another minor fib extension here at 3320. So you can see our projections point up into those areas because some of the evidence says higher. And as long as we have that, we're going to keep our projections pointing to the upside, as you see. So gold, quite strong when you look at this historic levels in here. And everything about this is saying to us that this is likely to continue to be strong until this dollar bond debacle stops. And then it's very likely that gold is going to start moving to the downside and have some kind of a significant correction after that. Let's take a look at /CL. That's the next one in here. We turned negative in light crude Well, way over here where momentum turned negative, and we saw the breakdown in the short-term cycles, and this was pointing to a decline to continue all the way out through this period, and really May through July or May through late June. And we thought it would get to low 60s, and it actually got here all the way down to 55. There's support over here at 53 and a half. It's probably going there. And this is just a reflection of the potential recession that we're going to be having here in the world, and the slowdown in the world because of the tariff situation and lots of other reasons. And this is just pointing to the downside. And if I look at the daily chart here, let me get that daily analysis up for you right there. And you can see that once we had a breakdown under this level right over here at 65, it was all over with. And the slim ribbon turned negative. And this was just a very negative condition. This points to this decline out into early June. So that's the alignment with the weekly pattern I just showed you. Once we get some bottom in here set, and we actually might have it right there, it probably tests a little bit in here. Then we get into the next rising phase, but that's very likely to fail. So end of May, early June is where we think that this decline is going to end in here in light crude. Let's look at natural gas /NG. And this is still holding in a positively configured pattern. You can see in here where the supports are right there, and it's coming right across here. So it's getting into that support zone right at there. And because the low is way down over here, it still says you could get some rally in here. But our momentum has turned down. It gives me caution when I look at that. And here, when I look at our analysis on the daily chart, this is a breakdown right over there. And where you have that cycle low, the rally, and it comes down, that says to me there could be trouble out into the mid to late May period in here. And that's why you see this pointing down. So this really could go out way out into this period over here. This is not a good sign at all. It would have to get above 4.25, a long way up, to make me believe that anything more positive is happening. So the natural gas market was looking good, and now it definitely is not. Momentum turning negative right there, momentum turning negative on the weekly chart. So what was a good pattern is just succumbing to the problems that we're seeing all over the world. So we're going to look at the Japanese yen two different ways in here. Looking at US dollar JPY, which has had a massive downside break, and the important future in the yen, which interestingly I have updated because I thought somebody would be asking about it, and I, of course, wanted to know the information on my own. So here's the situation in here. You can see in here that this really looks like a left-hand translation. What does that mean? It means that this cycle came down right over here. So you see where each of these cycle troughs was supposed to bottom. So you have a decline into that one, a decline into that one, a decline into that one. And these vertical lines show you the rhythm that's in here as it moves up and down. So the next one was really supposed to be right around over here. It rallied, hit this resistance, and then came down and broke. Now, there's about a 20% chance that this is all part of the same decline and it's extending down. It's more like a 70 or 80% chance that this is a very significant breakdown, and that the dollar versus the yen is going to continue on the downside all the way out here into July. That would be bad for the US markets, and I'll talk about that later on, why that's the case. As the yen carry trade unwinds and it puts pressure, but it's part of a whole complex recipe that's going on right now that's baking a very negative cake for assets. That's what's going on. Let's look at /6J in here, and you can see as I put up this analysis Look at the cyclical rhythms that are in here. They are beautiful. And there we're pointing up to this level here, the 78.6%. If it got above that area, we thought that the reverse carry trade would be putting pressure on the US market. And of course, it has been in here. And this is some resistances here. That's the 71.25 area here. And then up here at 72.50, this is 72.77. So all of this is still pointing to the upside. Look what happened here when momentum turned up right there. Look what happened here. Look what happened over here at these cycle bottoms. This is a minor cycle bottom that failed and gave you a negative message. You can see that. Perfect right there. But now it is super strong, and a super strong yen is super concerning for asset prices all over the world. I'll speak more about that moving forward. So that is a look at the Japanese yen and the yen versus the dollar. And everything I looked at, gold, light crude, natural gas, all of that, I hope it was very valuable to you. I'm going to turn this over to the team now so that they can look at the equity side and help you with that analysis.
Okay, I'm going to start. Let me share my screen. And let me know if you can see the monthly chart of Google.
Got it.
Okay, great. So this is the long-term chart. Every candle is 1 month, and these cycle brackets are how much? 24 bars in length. So you can see here was the monthly cycle low from the prior cycle. We had a positively configured cycle, moved up to this area between the 50% and 61.8% extensions. Then this giant, it's almost a bearish engulfing candlestick, and a return to negative momentum on the reversal scout. And this month, we have broken below the cycle low support, although that has not held. Of course, the month is not over yet. So we will see if this starts to show weakness or if it has the opportunity to repair itself. Now, there's an outside chance that this could be a late low if we shift all of this over and maybe widen the cycles out a bit, but it is looking like a left-hand translation, and we're not used to seeing that in these big tech stocks like Google, Microsoft, and some of the others. We have a monthly cycle timing window that is due starting in August of 2026. So if this is a left-hand translation, that's a really long time for a decline. Just looking quickly at the weekly chart, you can see that we are inside the weekly cycle timing window, and we have two possibilities in here. Either we're forming the intermediate low right now, or the next daily cycle will give us an intermediate low, and that would be a little bit late out in the May timeframe. So this one, we're going to just have to see how this next weekly cycle shapes up. And the other one that one of our members had requested was ARC Innovation ETF. So this is something that happens sometime. When you're doing monthly charts, you need really a lot of data, and there's not a lot of data in here. I can only put about 4 cycles. These are 32 bar cycles broken into minor halves. You can see some of these minor cycles are very clear, like right here, right here. This one gave us nothing for a cycle low. This one had the dominant cycle low here, minor cycle, dominant, and this one was either late or early, depending on which one you think is the minor cycle low. Moving into this time period between May and October, when we are expecting this long-term low in ARC to form. To find out when that might occur, we go over to the weekly chart. And you can see that we are expecting a weekly cycle low in here between May 5th and June 13th. This next cycle does not form a trough until March of 2026. So if we go back over to the monthly, that is way out here. So we are expecting the synced intermediate and long-term troughs to form in this early summer time period. In terms of projections, this has momentum that's still positive, but it's starting to flatten out and curl over. So I would expect that to turn negative shortly. We could retest this 78.6% fib area at 37.78. The next level down would be 29.43, which is the prior cycle low support. And those are my two charts. I'll turn it over to RV.
All right. Thank you so much, Katie. Let's go ahead and hop over to my screen. Just let me share it. You should see a chart of the SMH first.
Yep.
All right. So this is the both weekly and daily cycle analysis for the semis. And what I think is really interesting about this is first, let's see what's happening on the weekly. Is there's a low due here shortly, right? Now, either this was the low or there is one more move down. Overall, we would say right now, highest odds are we would see one more move lower prior to forming that trough. If we hop over to the short-term time frame, you will see that we have a low that is due. We are holding in here. So in the short term, we'd look for this to be a little bit more range bound. On the upside, right around, let's just say 209 to 215-ish on the upside. On the downside, 186 to 180. And we'll be looking for this to curl its way back down into that trough, which is due again early to mid-May. So many troughs are due around that time. Hop over to the next one, JP Morgan. JP Morgan just had earnings this morning. Now on the weekly pattern, not a good picture here. We would still be looking for this to form a lower high and see one more move down into that. It has a low that is due somewhere around the summertime period, right? So we'll still be looking for a lower high to form, a rollback down on the downside into that trough prior to seeing a real low form. If we hop over to the short term, there's a low due right around that same low. And we'll be looking for this to get a move up, and then fail again, back down and look back at that low around the 203-ish area. Pop over now to the next one. NEM, what an absolute monster in NEM. Let's just pop this over here as well. You can see on the short term, it is bullish, and on the weekly, it is as of now neutral. We'll pop over to what's going on in terms of the actual chart. And we are looking for a move back to this old high, right? So it still says likely higher. And we have a low that is due out in the summertime here as well in NEM on the weekly. Pop over to the short term. Look at that move off of the low. Absolutely massive run here. And what we don't have a whole lot of areas up here, but you can see only a few points higher. It has run quite a ways. So we'll have to see if this gets a little move down prior to turning back up towards those old highs that we just saw on the weekly. Okay, that really looks like the highest odds right now. Overall, it is very, very positive. Pop over to PLTR, and we'll see what's going on here on the weekly chart. There's a low that was due here, and we are looking for this to have a move up. But what I would say is the highest odds now that we have seen a move down to basically look at that low, highest odds would be it would fail in this zone right here, right? And we'd be looking for it to curl its way back on the downside and then roll back down, okay? That is really what the highest odds are at this stage. Pop over to the short term, a low that has formed. So what we are going to be seeing is for a likely higher low to form, and then for this to roll its way back up here prior to rolling back down as we get out later into May. And that is what we have here for PLTR. And I'm going to go ahead and hand this off to you, Slim.
Okay, great work by everybody. One more comment. There's a comment from Beck that said, Katie's long-term analysis was great. Thanks for providing this kind of information. You are welcome. Actually, we all thought it was fantastic, and there were some very good comments on YouTube. So Katie has been doing a lot of great work on the monthly charts, and you're going to see more from her on that. Great work, Katie. All right, so we're going to move on here. This is really important. Matt's going to review our services, and today's focus is on the Cycle Analysis Workshop Special, an opportunity for you to invest in my master work. So I'm turning this over to you, Matt.
All right, great work, team. Just grab the slide here. All right, we should see the homepage of askSlim. For those of you that are new with askSlim, we are a technical analysis services firm. We provide trade planning tools and comprehensive education for various trading styles, including a separate service to support day traders. So I'll walk you over to our technical analysis services memberships area. And what you'll notice is that there are 4 levels of membership with askSlim: level 1, 2, 3, 4. Those are our core membership services. And then we also have a day trader service as an option. It is an intraday swing trader service that we offer, very, very comprehensive. As you go from level 1, 2, 3, 4, what happens is that we expand your opportunity in terms of coverage and then tools. So as you go from level 1, which is mostly a deep dive into the indexes and ETFs, you then expand that into our complete focus list with level 2, and those are static charts. And then we have a extremely large and robust trader library that comes with level 2. When you move into level 3, that's when you start to be able to access our trade planning tools, such as the MCM, the ranking system. Those are fantastic tools, and our cycle timing tracker. And then once you move into level 4, that's when you get direct access to our charts. So those charts that you see the team utilize as part of these events are the exact charts that you actually get to import into your own Thinkorswim platform. Yes, that's our current platform, and you need to have that platform to be able to have compatibility. But if you do, then you can see our work live as we update those charts. Okay, but as Slim mentioned, the focus for today is on the cycle analysis workshop offer that we have. That is a special offer. Typically, this only goes on sale twice a year where we run a promotion. It's normally $1,297. It's $400 off for the cycle analysis workshop. And if you're a level 3 or 4 member, as indicated here, there's an extra $100 off that is available. And this is a lot more than just a workshop. Essentially, it's the culmination of Slim's life's work in the field of technical analysis. And really, we should think of it as a comprehensive technical analysis library with a specialized focus on our foundational methodology, which is cycle analysis. So you're going to have access to over 20 modules. Those total more than 15 hours of in-depth instruction. And all of these modules are presented by Slim himself. And Slim, as he goes through this workshop, he covers an extremely wide range of technical analysis concepts that includes momentum and how that influences cycle patterns, candlesticks, gaps, identifying what we call valid trend lines. And there's obviously price projections and how we utilize our fib retracement and extension tools through swing high, swing low analysis, and just so much more. So it's extremely comprehensive, and you get to learn and then utilize the same techniques that you see the team deploy all the time and that Slim has developed with us now for over 50 years and 6 decades. So this is an extremely important opportunity to invest in this workshop. And again, it is $400 off if you are brand new to askSlim, or if you're levels 1 through 2. But if you are 3 or 4, you'll get that extra $100 off. The way that you can access that special link is to write to me directly, and I will send you that special link. What I do want to just finish with here is showing you the actual cycle workshop page, because a lot of people wonder, well, what does it look like or how do I access the cycle analysis workshop? And it'll appear on your dashboard like this. This is the home for the cycle analysis workshop, and there's no special software that you need to download to be able to access and review the workshop modules. They are video in nature. And then also, as I said before, there's over 20 of them. We have 7 addendums that have been put into here. So there's a lot more bonus material that has been added over the past several months. And just recently, as Slim completes his behind the cycle analysis curtain workshops, we add some of the best segments in there. And so there's a new one that we added in here about chart training basics. There's also very nicely associated videos here. When we have a topic such as momentum, we'll then bring in other videos that Slim has done on that topic that you can have easy access to. So again, this is a complete technical analysis library with a focus on our core methodology, which is cycle analysis. I would strongly recommend that you consider this investment. It will absolutely change the way you look at charts forever. All right, Slim, back to you.
Hey, great. Great. You presented that in a great way. It makes me feel good because I really want to be able to pass forward everything that I have learned in all of this time. And I can't imagine a better way for people to get a better understanding of technical analysis when you invest in this type of service. I mean, you're going to get my life's work. This took me years to develop, and I'm just so happy to share it. So I really encourage you to invest in this. Okay, so I'm going to come back, take this over, and we're going to move on with what I think is going to be quite an interesting segment coming up here. Stock market analysis and projections. Important information first. Please take time to read this slide. It talks about our approach to analysis and what it means to you to use the analysis that we share, and the important concept of trade ownership. You must own your own trades. You own your own trades, then you're going to be the one responsible for managing your own risk parameters, and that's what's key to your ultimate success. All right, we have a little bit of a market brief in here and lots of things that I'm going to talk to you about. Indexes thrashed wildly on tariff machinations this week. Wednesday saw historic upside reversal on a tariff pause, as the president paused for 90 days the tariffs he never put on anyway, which is really interesting. The S&P 500, NASDAQ, as of about noon when I put these statistics in there, the Dow wasn't, and the S&P 500, NASDAQ up 3 to 5% on the week. You would never really believe this feels like an up week, but the Russell's near unchanged, and it's really lagging because the small caps borrow the most money and interest rates are going up. So the Russell has been lagging. Investors are very on edge due to collapse in the dollar and bonds. I'm going to talk more about that in a moment. Intraday swings are enormous. This is great for trading, or a huge challenge for trading. I've done, I think, a good job. When I do all the chart updates, I supply what I call my most notables. And then there is often teaching pieces around how to address certain market conditions. And I've talked about that a lot recently. Very, very important. So if you don't get that, levels 2, 3, 4, you all get to see my most notables when I post those, and really talking about how to engage in a market like this. Has the worst been seen for stocks for now? I think it's possible, and I'm going to show you why. What are the dynamics that are moving the markets in this incredible way, where you're having the bond market collapsing, the dollar collapsing, the pressure on stocks, and then releasing in a big way? All of those things are very important to understand how they're all working together, because when things start to change, then you're going to really understand what's going on. If you can get a good handle on what's going on right now, you'll be able to understand as things change how to engage in the markets on those changes. And changes happen very fast in this market. Here are the current negative dynamics that are going on in the market. 1 and 2 may be interchangeable. It's a chicken and egg thing, really. The stock market was extremely vulnerable. Those of you that followed me saw for months I was talking about the incredibly high valuations that are in the market, which makes it very sensitive to shocks. And shocks we certainly had. Rising interest rates, trade uncertainty over the tariffs reduced investor confidence in future corporate earnings, as all of this discussion about the coming likely recession will, hit on margins, hit on earnings. All of those are causing a reset or repricing in the stock market. When the market was at 207% of GDP, it was probably overpriced by 1/3. Now it's, given up a lot of that ground, but what is it down? 10, a 12% or 13% now from the high? It is still very overpriced. So upside progress may be a problem. All of that led, investors to be selling equities, leading to, downward pressure, a lot of volatility. Trade policies and tariffs. Again, chicken egg thing. Is it that the stock market was too high and vulnerable? Or is it the trade policy knocked down what was a bubble, essentially waiting to find a pin, as somebody else told me just recently on the internet? Love that. Bubble waiting to find a pin. President Trump imposed these tariffs on multiple countries and disrupts global trade. Tariffs increase the cost of imports, they fuel inflation, eventually bringing deflation, in my opinion, and that pressures the U.S. Global trade uncertainty reduces the confidence in the U.S. dollar. That leads to a decline in the dollar. And we saw the dollar moving down before any of this tariff stuff really was coming out. Market-driven rise in interest rates. Inflation concern had the interest rates going up. We saw the Fed cut rates and interest rates went up 1%. So we know that that was happening already. And that brings fiscal uncertainty, causes investors to demand higher yields for Treasury bonds. And that's what we saw happen. The market pushed long-term yields higher, even though the Fed is not raising rates in its policy. I would think if the dollar keeps collapsing, the Fed will have to defend it, and that means higher rates, not lower rates. Higher yields increase borrowing costs for businesses and consumers. That slows economic growth, and that puts pressure on the markets. Here's what we looked at earlier. The yen is soaring, and the reverse carry trade is getting unwound. The yen strengthens as it serves as a safe haven currency during global instability. So as the yen is going up, as I showed you in the future analysis, then of course the dollar is going down. Investors who borrowed yen at low interest rates to invest in higher yielding assets, that's the carry trade, are forced to unwind these positions as the volatility rises. So that puts the pressure on global asset prices, especially U.S. stocks and bonds. We saw that happen last year where the reverse carry trade put a lot of pressure on the market. And that is what's going on now, in addition to everything else that we see. Now the basis trade is collapsing. What does that mean? Hedge funds engaged in the basis trade. They arbitrage between the Treasury bonds, cash, and the futures. And when they face widening spreads, it's due to market stress. So Treasury yields and increased volatility make these highly leveraged trades unprofitable. There's about $800 billion in those trades out there. So essentially what happens is that it causes liquidity stress. I'll get to that in a moment. Margin calls force the hedge funds to liquidate positions, flooding the market with treasuries and futures. Essentially, what they do is they borrow from the repo market. They use that money to buy the cash treasuries, and then they short the futures because as you move towards the expiration time, that spread comes in. But when you get into this condition right now, then essentially what they do is they're getting forced to liquidate, and they are flooding the market. The liquidation of the basis trade reduces liquidity in Treasury market, critical for global financial stability. Broker-dealers already have problems with regulatory capital requirements, are struggling to absorb all of this selling. Liquidity stress spreads across the markets, amplifying volatility and creating systematic risk. In other words, all of this selling in the bonds, all of this selling that's going on in the dollar because of the reverse carry trade, all of this exiting out of U.S. denominated assets is causing a huge amount of stress. There's a feedback loop because falling asset prices, stocks and bonds, they erode investor confidence, and the collateral for the leverage trades. This triggers more selling, more margin calls, more unwinding of positions across the markets, more of this reverse yen carry trade, and the cycle continues. A self-reinforcing negative feedback loop of instability. That's what's been going on right now, and that's why the markets have been getting hit. To stop this, you have to put confidence back in the markets. That's going to take a lot to happen and a long period of time. That's why I think that there's certain patterns in the market that are suggesting that we might be in a wide range in the markets coming up, and I'm going to show you that as we move forward. I hope that was really incredibly clear to you so you understand this dynamic that has been going on in the market right now. Okay, stock market analysis. We're going to look at these charts that have been causing this big trouble. And then we're going to look at the S&P 500, the NASDAQ, the VIX, and the Dow Jones Transports, which I think is important. And of course, our proprietary indicators and the market condition monitor. So let's start out by looking at the TLT and the dollar, which have been causing the big trouble. And I want you to see why this is not going to end soon, and why that will prevent the stock market from having any kind of a big upside move that can hold. So let's take a look now as we look at, I'm going to switch this over from the yen over to TLT right here. So here is the TLT, and I'm going to put TLT up right here. And you can see that on the what's going on right now, and we'll go to the short-term trade here, and you see the short-term trade on TLT is bearish. I'll expand this right over here. We're going to maximize this sell, and I want you to see the cyclical patterns that are in here right now. And so this is your big dominant cycle there, and you can see the minor third. So here's your minor third trough right here, your minor third trough here, and where both the dominant and minor had your trough here. Here's your trough here. This one was a little hard to see right there as it had this left-hand translation. Once it broke under here, it was negative. And here's your trough here. What is this showing me right now? And this shows me that this big downside move in TLT, which tested this low over here, says at a very best case, if it tries to rally back up over here, it will likely continue on the downside into this period mid-June to out here potentially into August. This is a very bad sign if you get, underneath this low, which essentially you did, but it might be false because it didn't hold under there. It's going to say that the bond market's in trouble all the way out into 2026, as you can see right over here. Let's see how this trades in here. But this is warning to me that interest rates are very likely to be stubborn. In other words, they won't come down very much. They'll come down some when the bond market pops to the upside, but they basically will not come down very much. And over here, where TLT is pointing to the downside, it says to me, you're likely to continue to get this pressure and the dynamic going on that I'm showing you right now for a while here out into the summer. When I look at the daily chart here on the TLT, this is very significant. Now, again, look at the gorgeous rhythms in here in the cycle analysis. We just showed you how to subscribe to our cycle analysis workshop so that you really understand this. When you break underneath this cycle low, see this cycle bullishly configured right in here, it says that you're likely to have a rally above that level. Look what happened right there. Then, after that failed and came down and broke this cycle low, which we have always listed right over there, it tells you things are negative. When I look at the timing on here, this comes out to around end of May, beginning of June. So there may even be another negative cycle out there, but that tells you, as you've broken these weekly supports right over here, that even if you get some rallies, you're likely to fail and then get interest rates moving up again. This is not a good picture for interest rates. So the next part of this dynamic that I've been discussing with you, and by the way, you see the downturn here in momentum on the weekly TLT. When that happens, you usually fall for some significant number of weeks, as you see right over here, as you see that fail right there, and it's likely to keep putting pressure there. So the other part of this, collapse that's going on is in the dollar. And look at the timing on these cycle rhythms also. Here's your low right over here. Here's your attempted rally, and translating negatively, saying that this decline is likely to go out into June, July. That's exactly what I just showed you in the interest rate picture. So that telling you that this dynamic that we have going on in markets right now is likely to continue, and that you're going to get rallies, you're going to get relief rallies, you're going to get tone changes like that we had last Wednesday with a 480-point move to the upside in the S&P 500. Those days are going to come, but the markets are going to keep failing again based on everything that I see in here. And I'm going to show you what I think that pattern is going to look like and why in just a few minutes. So that's the look at the TLT and the DXY as interest rates, the bond market, the dollar market are causing big trouble. And I don't think that's going to go away for a while, as I just showed you. So let's move over to the charts in the S&P 500. Let's look at SPX here. We'll put it up on SPY right over here. And you can see in here that based on the short term, because the short term turned up, the market has neutralized right now, and it was very negative, remember. So on 4.9, the short term pattern turned to neutral. That is an improvement. The intermediate pattern still bearish. When you get bearish dominance of the intermediate pattern and the less dominant short term pattern is neutral, it gives you a sense that rallies will fail, and you're going to probably get rallies. Let's blow this up right over here for you to see, and you can see these cycle rhythms here. Now, this low over here, as you can see, absolutely bullseye tags that monthly support. That's the 38.2% support level right over there, and then has this big upside move. Here's your resistance areas, and it's come up to the lowest resistance area right now. 53.35, 54.90. 54.90 is very possible in this upside move. And here's another one up here at 56.45. I have some doubts about that one, but it still could make it up there. Now, the question is, what happens on the next move down in here? Now, I want you to keep your picture on this, because this is a crash. I'm going to show you other crashes and what the formations were after those crashes. And it's very important to your investing and trading to understand this. Is this market going to come down and test this low or break the low? Or are we going to actually get a range somewhere between, 55, 5,600 and somewhere down over here, 4,900 or so, where it keeps chopping around in here? I think that's more likely what's going to happen, and I'll show you why in just a few moments. Take a look here, and you could see this is the dominant cycle as measured by the MDY. The mid-cap stocks have really helped us with this. And you see this is a 21-day cycle. This is a 21-day cycle. This is a 20-day cycle. This one's short, 17 to 19 days. Now, this is somewhat common in crash-like environments where it gets so oversold it can't stay down for the full length of the whole cycle pattern. See over here, our option bias indicator. Whenever that you get those orange dots, it's warning you of an extreme situation, and that was perfect, as you got that right there, and now we're moving to the upside. The question is, and you can see in here at the dominant cycle right over here, that points out to sometime in mid-May. I'm going back to the weekly cycle. This comes over here sometime in mid-May. So this is the time frame we're looking at. That could be another downside move. Again, this is about 56.50 right over here. This we call this the repair level 55.77. This is the 50% level at 5,500. This is the area that you really could get a chop in. And over here, coming out to mid-May, another move to the downside, which either doesn't get quite as low as this or takes it out by a little bit. When we got this big downside break over here, I said to my members in my most notables, I could see these in these stocks, which I'm an observer of the heavyweights and the ones that affect the indexes. They didn't want to go down anymore. I mean, there was just buyers coming in. So what that did was it made me believe that a very oversold condition where these stocks fell so much, especially these mega caps, they were done going down. I mean, I could really see that. And now the situation is what will the test look like over here coming out into that time frame? When I move over to the NASDAQ NDX, we'll see right in here, that's really the same pattern. It got down here. This is the minor third. And the same thing. I mean, these stocks were very oversold. You see the bottom warning here, which said you were going to get a bounce. Resistance is up here. We'll just call it 19.4 up here to just over 20,000. We could see these prices. And then again, this comes out into this mid-May period right there on that daily chart. So this comes to the mid-May period here. Are we going to test this, take it out, come down and not get that far down, and then move up again? I'm gonna make a bold statement right now with all these negatives that are going on and everything I showed you. I said at the beginning of the year, I thought the market would decline into the May-June timeframe. That came to fruition, and now I'm going to tell you that I think that basically in here, outside of a test, I think the lows for the year have been seen. Now, there's a possibility we get a good rally out over here, which takes you out into July, August, September, and then the fourth quarter is bad. That could take out these levels for sure, going out that far, because I believe this is the beginning of a bear market. Looking at this, the beginning of a secular bear market, and that bear market, the cyclical bear market, goes into 26. The secular bear market may go out a decade. So, I think that this is a big reset, and the chances of getting above that 61.47 high, by the way, 61.75 was where I thought the high would be for the year. The chances are just very small of that, and much more a possibility for range trading. Let's take a look at the VIX right over here. Now, the VIX daily chart, you can see this chart right over here points to a pullback in the VIX, which points to a rally in the stock market or a bounce out into sometime late April. So we're now coming into mid-April, a couple weeks that we could see a lot of sideways churn before you get over here and that next period into that mid-May period that I'm talking about, where the stock market begins to move down again for that test. So this is following that pattern nicely. Here's the weekly pattern, and here's where that index rebound is out into this mid-April period before we get into that May-June next period of risk. So all of that is in alignment with what I'm talking about. Let's look at one more chart, the Dow Jones Transportation Average. And this is just fantastic because I showed you this chart weeks and weeks and weeks ago. The green circles are where you begin the rising phases. The yellow ovals are where the declining phases are, or the periods of risk. When you had this rally and it came down and the momentum turned negative, it came down right exactly to the cycle trough. You could see that there. Then it rallied and failed, and then broke that level. It was in big trouble at that point. And this points out to July. So this whole choppy period that I'm talking about, I think potentially comes out into that May, June, and maybe even extend out a little later based on what I'm seeing in here on the Dow Jones Transports before you really start to move to the upside. Look at how gorgeous these rhythms are in these cycles. The troughs absolutely are nailing the time frame. And when you have a positive translation, you're probably going to make a new high. Positive translation, probably going to make a new high. Here's a positive translation that failed, but still made that positive translation, went to a new high. And then you broke this and it says you're going to go to lower lows. And that's exactly right. Please subscribe. Make that investment in our cycle analysis workshop so you do understand this. Some people are going to say, Slim, you promote too much in this show. It's not promoting, it's you learning. That's really what I want to happen as you look at that. So we have now looked at all of the charts I'm going to look at, but don't go away because I want you to see something. This is incredible. So I just made a case that the market was likely going to have a range trade coming up here. And I want you to see where that comes from. Now, the market has had big drops in these last few years and V bottoms. And you could say that last Wednesday looked like a V bottom. I don't think it was because of the timing that I just showed you. But I want you to see something that's really important. So I hope I hope that you're still here with me because this has been a long segment. And look at this. This is the crash of 29. Now you can see what happened there in the crash of 29. It had a giant decline. And of course, the decline that we have now is smaller than this. And eventually the 29 went down much, much further into 1933. But all we're looking for is the shape of what happens here for your trading. Look over here. Yes, we have our key indicators telling you when there was going to be a downside momentum resumptions in here. That was spot on. It shows you where the slim ribbon turned negative. All of our indicators work as far back as you go, and they really give you a good sense. The key is that it then begins to rally and comes down. Some of these are going to have deeper tests that I'm going to show you, but you can see they make a range in here after these big steep downside moves. Why? Because the stocks look cheap and because people want to invest after that. But the downside conditions and those things that cause the decline still are there. So you create a range. This is the crash of 46. The same thing. You can see in here where you got a very, very big decline or bear market. But then after it was over with, and look at the slim ribbon telling you about those negative conditions, it started to move sideways in here for over 2 months. And that's what happens. You build a range after big declines. So those of you that are looking for big upside moves out of here, the market is still fighting all of this negatives that are out there. And yes, things look cheap. Yes, you're going to get bounces, but you're also going to get downside moves. That's the crash of 46. Look at the 1960 bear market. It's right there in front of you. The same thing, a big downside move and then a range. It tries to rally, it comes back, it tests the low in this case, which is what I told you could very well happen as we come out into this May-June period. Here's the first leg of the bear market in 1973. The big downside move and then the big range in here that lasted for about 2.5 months. Tests the low. Here's the second leg of the bear market in 75. The big downside move. I'm starting to sing the song about this. And then the sideways correction and range that just comes down and tests the low. How about the crash of 78? By the way, this was one of my, oops, I didn't change that. That says bear of 75, but that's the crash of 70. That's the wrong, I have the wrong chart up there. So I'm going to skip past that one. Forget it. The crash of 87. This is it again. And you can see right there that big decline. Of course, the crash of 87 was steeper than we have right now, but it's the same thing. You get that big counter upside move, momentum still stays negative. It says to you, yeah, you're going to trade in a range over here, and then it comes down and tests that low. So every one of those was the same thing as you can see in there, and that's what I think is going on now. So you can see the kind of research that I did in here for you to understand this and why I think that, based on the analysis I just showed you, that the market is very likely to have seen the worst of it for this year. Yeah, I could tickle it out by a few percent on the downside in that May-June period. But, you know, we looked for the lows for the year to come in this time frame, and I actually think that is what's going to happen. If something gets absolutely crazy, then yes, you could have more free fall into that May-June period. But I think the highest probability is you're going to get into this kind of range that we're talking about. That's what I wanted to show you in the stock market. Man, did I give you a lot of information. It took me about 6 hours to put that together for you all. I want to remind you our cycle analysis workshop special is available now. For people that are brand new to us, it's $897. It's a $400 discount. It's my life's work teaching technical analysis and cycle analysis. So many videos in here. It's one of the greatest opportunities for you to learn technical analysis as I teach it. Level 3 and 4 members, write to Matt at askSlim.com for the exclusive discount link. It's only $797 to you. You're going to get an extra $100 discount. If anybody wants to jump in and become a level 3 or 4 member or upgrade, then do that and let Matt know you did that so we can give you this extra $100 discount. So, boy, oh boy, I'm tired. What do you all got to say about that?
I know that took you a long time to put together, Slim, but I'm glad you did. That was great.
Thank you.
Yeah, for sure. That was one heck of a historical comparison that you did with those other crashes. So greatly appreciated.
Yeah, great.
Yeah,
Absolutely.
you know, I think one thing that is super important to understand too is that, you know, we see moves from, you know, higher highs, higher lows, all of a sudden a sharp breakdown that then takes out a lot, right? And we go through that area, which could take years, where you just trade sideways, build out, build out, build out, prior to seeing a real move back on the upside. That's probably what's going to happen. So awesome job, Slim.
Yeah, thank you very much. That's it, everybody. I hope that you can use the information that we presented to you and to your best for trading, and also to the education that we're hoping that we help you build so you can become the best trader that you can be, or best investor that you can be. Everybody, great job by the whole team.